Ram, who sent in a question from Bangalore. Now he says that he's planning to buy property worth 76 lakh rupees. He says he already owns a 2 BHK property but needs to upgrade to a 3 BHK. He also has a loan of 10 lakh rupees. He wants to know if he can avail another loan of 30 lakh rupees to buy the 3 BHK. He's currently working with a private company, earns a monthly salary of 70,000 rupees, and he says that he suspects that there could be a risk, that his job could be at risk. Should he now take the plunge?
So I think excellent question, and I've not completely understood this, whether he wants to sell his existing 2 BHK and buy a 3 BHK, in which case it's an upgrade, or he wishes to keep his 2 BHK and buy another 3 BHK. From the amounts he is mentioning, and the city I think he mentioned is Bangalore, I suspect he wants to buy another 3 BHK.
He says upgrade. So I'm
right.
guessing he's probably selling and buying.
So possible. So if he's selling and buying, then probably he would not need a 30 lakh loan just to add another room. Be that as it may, I think the key issue is, if your EMI is 45–50% of your net take home, you are in the risk category. He did mention that he is in the software industry where the risk is relatively higher. One of the things that you should definitely do is that you should look at the insurance products that pay for about 2–3 months of EMI if you lose your job. There is an asterisk to that, which we can talk about later, but that's a product that you should look at. The second thing is create a contingency fund. Treat that as a part of your upgrade. A 6 months contingency fund that will pay for 6 months expenses, including 6 months EMI in the event of a job loss. Add that to the capital cost that you are going to incur on the upgrade. Make sure that that contingency fund is there. That will help reduce your risk to a great extent.
Now, one is, of course, two questions here, Harsh. One is, of course, that asterisk that you spoke about. I'm sure there are conditions attached over there. If you could just elaborate a bit on that. And also, you said that he falls in the high risk category. What is a high risk category when you take a home loan, or when you take any loan, in terms of paying back loans?
So the asterisk is, whilst there are policies available in the market that will pay say 3 EMIs in the event of a job loss, the definition of job loss needs that you need to be fired from your job, versus I think in most private sector you just asked to resign, and you have to resign, and if you resign...
Oh, so if you get a pink slip, the insurance policy doesn't cover you. That's
if you get a pink slip, the insurance policy covers you, but typically in most private sector...
If you've been laid off, you don't get a... the policy doesn't cover you.
I think in most private sector companies, they call you in and ask you to resign, and you resign, and they accept your resignation. Unfortunately, the policy doesn't cover that. So that is the asterisk which is there with that policy. The second thing you mentioned about risk. So typically, if you look at the expenditure data, roughly about 25–30% of your monthly income is spent on home related expenditure. That could be rent, it could be EMIs, etc. on an average. If you look at financial prudence, anything up to 40% is considered acceptable. 40–50% is a grey zone. Anything above 50 is fairly risky, because please remember, rates could go up over you're talking of a 15-year, 20-year exposure. Notwithstanding what we may have in the next couple of years, you may see rates go up, and you may see EMIs going up, and your incomes may not be able to withstand that EMIs going up. So therefore, it is in your own interest to have these risk mitigation measures, such as the contingency fund, such as the insurance that I spoke about.
Great things to keep in mind, and this would apply for all home loan borrowers. In fact, keep a 6-month contingency fund ready, and this contingency fund should include not just your home loan EMI, also your other expenses. It should be able to cover all your expenses for the month, and that makes sense in case you end up losing a job or you have to quit your job for whatever reason. That is something. The other thing, of course, your EMIs, all your EMIs put together should not exceed more than 40% of your take-home salary. Anything more than that, and you are in fact in a high-risk zone, because God forbid you lose your job or something happens to you, then it will be very, very difficult for you to pay off those loans. So those are things that one should keep in mind.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/magicbricksnow. And don't forget to click the like button. You can also follow us on Twitter at magicbricksnow. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/magicbricksnow.